Good evening. This is Tom Alexander. It is Sunday, August 24th. And this is the U.S. stock market weekend report for the week beginning Monday, August 25th. And we have a bull market in progress. We had a ripping day on Friday that has a number of implications. We have what appears to be a broadening market. We have the index finally showing some relative weakness versus the other indices. Let's take a look at the chart and see if we can draw any conclusions about what's going on, the path of the market, the health of the underpinnings of the market, all of these things. By the way, please subscribe and like, comment the video. It helps with the algorithm, as most of you know. Also, you can access this report as well as other weekend reports if you go to alexandertrading.com, click on the top toolbar on weekly update. It's free. You can see this report. You can see all the charts. You can download a PDF, and you can see previous reports, and you can follow the thought process, and you can judge for yourself the effectiveness of the analysis that I do that is based entirely on the auction market process of development. Okay, let's take a look. And we're going to start with the SPX. We had a ripping up day on Friday in the SPX. We closed at a new all-time weekly high. I'm not sure if it's a new all-time daily high. Close enough. Very close. But you can see now, what are the key reference areas as we head into Monday? Well, the general guideline is when you have a strong conviction day like this, particularly in the context of this potentially being a kickoff move, ideally we won't see more than on any retracement Monday or early next week. We won't see a retracement much into Friday's cash session range. 50% is a rough guideline. More than that, and then you start to increase the probabilities of other scenarios. Now, I want to make it perfectly clear. I am bullish. I think the market is going higher. We had tremendous upside momentum on Friday. Now, that's what I think. What would invalidate that is if all the indices now close below Friday session lows. The guideline of a retracement holding around the 50% level is just that. It's a guideline. So here's the SPX. Let's look at the index. Very similar scenario, except you can see we're a bit below the all-time high in the index, but it was still a wide range ripping up day. We're only up 45% off the April low, so I don't know what's happening here. The laggard of the index is just terrible. Okay, if we look at let's look at the Dow. The Dow, new all-time highs. It sort of led the charge higher along with the New York Composite. New all-time highs in the New York Composite. The Russell, the lowly Russell, the perennial laggard, had a huge up day and is now making progress towards its all-time high set way back. And when was this? This was 21. And we took it out by a few ticks over here, double topped back in 24. And now it looks like we seem to be assaulting that again. That's very positive for the bull market. Now, another thing I want to show you guys, I'm going to show you some breadth stuff here. This is breadth. This is NYSE closing breadth. This is 10-day moving average. The red is 10-day moving average of NYSE advancing issues. The 5 is a 5-day moving average of NYSE advancing issues. These are diverging, but as I have been pointing out persistently for months, this doesn't mean a whole lot of a bull trend. Now, if you look at the NYSE cumulative advanced decline line, which I showed in last week's report, again, you can go to the website and you can look at the report from last week. It was at new all-time highs last week. Well, it's at new all-time highs again. I've been trading 40 years. I am unaware. I've been unable to find a bull market top that coincided with an all-time high in the NYSE advanced decline line. What this tells me is that there are many, many months left in this bull market, regardless of any interim pullback along the way. Now, we've been extended since this April low, or even more extended. The retracements have been extraordinarily shallow and seem to be getting more and more shallow. For instance, okay, we had this ripping up breadth day on Friday, and one of the curiosities about this, I'm just pointing this out, it doesn't necessarily mean anything. The type of breadth we saw Friday is really the type of breadth you typically see coming out of extreme compressed downside conditions, also referred to as a term I don't like to use, but oversold. Oversold, such a relative term. But I think we can all agree we got extremely compressed at the April lows. Everything was compressed. Everything pointed to an extreme. We were down 21% off the print high. The 10-day moving average, 5-day moving average were both at lows. And then we went ripping higher, and we had the kickoff move a couple days after the print low was put in, and we've been going higher since. Well, this move, the expansion in breadth was roughly equal to the same expansion breadth we had back on April 9th, but it's following a 2% print to print decline. It's pretty unprecedented. I don't know what that means. But again, I think we're in a bull market. I think we're going to see higher prices. And what would invalidate that? Listen carefully. If all the indices, the SPX, the NDX, the Russell, the NYA, the equal weight S&P, all close below Friday session, cash session lows, something is awry with my bullish assumption. And it's probably puts us in a very bearish situation. Okay, I want to make that clear. Now, I'm not talking out of both sides of my mouth. You can have an opinion, you can have an assumption, but if you do, you have to know what invalidates it, and that's what invalidates my bullish assumption. As one would expect, VIX dropped on Friday to the lowest level that we have seen since back in December of 2024. What did that look like on the chart? Let's see. Well, that was pretty near a top, but you can see we had been very low for a long period of time. This is just coming off this massive spike in VIX that went all the way to 18, or no, I'm sorry, not quite that high, 16. But anyway, so that's where we are in VIX. VIX is going to basically follow price. If price is going up, VIX generally is going to drop. If price is going down, VIX is generally going to rise. There's no big tell in VIX until it gets to a real extreme. And just as with breadth, VIX is far more effective in helping to identify potential or pending short-term lows than it is highs. Okay, guys, that's pretty much it for this week. I mean, we'll see. There's always some exogenous event. I think there's a lot of economic stuff coming out next week, but the price action and the internals of the market are extremely healthy and point to higher prices. You guys have a great rest of your weekend. I'll speak with you again soon.